Investors and traders, welcome to the channel, Market Chart Pattern. Today we'll be taking a look at the key US banking stocks, and we'll also take a look at some ETFs related to the financial sector. This video is for educational purposes only, and it is not a financial advice. So guys, what we are looking at is the daily chart of the ETF, Spider S&P 500 Regional Banking ETF. So these are the smaller banks, like the Silicon Valley Bank, which went belly up, would have been part of this index, and some of the other smaller ones will also be part of this. So guys, what we are looking at is we were looking initially for a pattern formation where we were looking for the price to come and find support around the $46 per share level. And what I'm going to do now is that actually the price had fallen below and the pattern doesn't look that great. So I'm going to actually remove these triangles, make it a little bit easier to see. So just to blow up here and zoom in, what we are looking at is that the price has been trading for several weeks now below the 61.8% Fibonacci retracement and also the 1-to-1 price projection. The next likely target is the 78.6% Fibonacci retracement, which comes around $38.32. So it looks like slowly it's gonna move towards that direction, and around here we'll have to look and evaluate whether it's gonna find any support. Let's take a look at the XLF. So this is the Spider Selects Sector Fund Financials. So this is the ETF for the financial sector. So here, guys, if you remember, when we started to look at these about a month ago, we have been looking at a pattern formation which is ABCD, this long-term one, which could actually see us go as low as $25.25, and we have this 61.8% Fibonacci retracement coming around the $26.80 level. But what no price moves in a straight line. So what we were also watching for was in this possible BC leg here. The support came in around the 78.6% Fibonacci retracement. In fact, we had drawn this support level coming from this structure here, and that's where the price found support. And we were looking for the price to get up to about the 38.2% Fibonacci retracement of this leg here. This is exactly what the price seems to have done, and today it reached that level and was unable to close higher, and in fact on the day it has closed in the negative. So over the next couple of trading days, we'll see and evaluate how the price is going to trade, whether it's got enough strength that is able to move above this key resistance level, and we'll be looking at 2 consecutive daily closes. If not, there is a good chance that it's going to go back and test these lows, and if it's not able to hold this, then that will be a signal that perhaps this ABCD formation that we have been looking at is now in play, and the price could actually move much lower, which would mean that there is going to be stress in the financial system, and that could perhaps even have a drag on the overall stock market, like the S&P 500 broad indices. Next one we're going to take a look at is the individual banks. So we are going to take a look at JP Morgan. JP Morgan is one of the bigger banks, and also it's one of the well run and well managed banks out there in the United States. So here, guys, what we were watching for was that this was the 61.8% Fibonacci retracement, and we also looked at the possibility that the price is actually in a head and shoulder formation, and because the price was not able to take out 61.8% Fibonacci retracement, it remains as a key resistance level. It wasn't even able to fully touch that, but it came pretty close, so close enough. And then over the course of the last few weeks, the price did find some support around the 38.2% Fibonacci retracement. Not exactly the level, but it has been just bouncing and dancing around it. But now looks like perhaps there is like more weakness coming into it, and the next move to the downside, the price level we would be taking a look at will be the 61.8% Fibonacci retracement coming at $117.63. Okay, now let's take a look at the Bank of America. This Bank of America stock actually looks much weaker, especially when we compare it to a stock like JP Morgan. And here, in comparison to the JP Morgan stock, this one actually was not able to take out the 38.2% Fibonacci retracement. So if this actually move lower, if it's not able to take out the 38.2% Fibonacci retracement, it means like in these strong trending markets, normally that's where the resistance comes in. So there is a possibility that we have an ABCD in play, and the next, kind of the support level from a retracement perspective is the 78.6% retracement around $24.80. But looks like it might just be going for a double bottom around here, around the $19 per share level. So this is what we are watching um, in the Bank of America. The price action today, it's kind of a topping formation here, a double top perhaps. Let's take a look at Citigroup. All right, so the Citigroup stock is also, one of the weak banking stocks. Look, even after the um, 2022, 2020 low, the COVID low, it hasn't been able to take out the high of, which had formed in back in January of 2020. Um, the other stocks like JP Morgan did. So it remains weaker in our opinion. However, recently the price has been kind of hovering around this level or a little above the 38.2% retracement, and it's just in a sideways uh, trading range. Um, so we are just watching what the price is gonna do. Perhaps it move a little bit higher, and the stronger resistance around the 61.8% retracement, $48.46. It might try to attempt that, or there's a possibility just blowing up the chart. That this might just be a double top formation, and over the next couple of trading days, we'll see how the price is going to trade. We have a gap open here, and then of course we have some structural support around here. This is what we're watching in the Citigroup stock. Now let's take a look at Morgan Stanley. So Morgan Stanley has been actually one of the better um, banking stocks in terms of the price action. Here the support came in at the 61.8% Fibonacci retracement, and also we have a really nice trend line. We were also looking for that perhaps this stock is going to go and trade, towards this 38.2% Fibonacci retracement around the $89 and 10 cents level. It made an attempt, but there's a sell off. It's kind of meandering around this level. The candles do not look very strong, and if it is able to close below this trend line, and the next level which we'll have to look at will be the 78.6% Fibonacci retracement, which will roughly come around the $79 per share level. Uh, and then there's a possibility that this is also moving in an ABCD formation lower, which could perhaps see the stock go towards the 21st December uh, gap area around here. We have an open gap left here. Also, we have the one-to-one formations coming around here. So that will be the next kind of the key level around $65 per share level. Um, if the stock begins to move lower. So guys, this is what we are watching in Morgan Stanley. Let's take a look at WFC, which is Wells Fargo. So the guys, the Wells Fargo stock is pretty interesting because it topped way back in February of 2022, right? And when it was topping around here, we had done a video. We were looking at around this level where we have this pattern formation for a possible top to come in because of certain key patterns which were coming around here and forming a confluence level. So the stock did find a what do you say resistance. It moved lower, however it also found support and formed a new high. And essentially what it did was it formed a three drive to a top pattern: drive one, drive two, drive three. And if we were to, let's say, just this is hindsight of course, just draw a trend line like that, and that's where the top happened. But we were fairly close as well, on a stock which is trading around $60. We were in about $3 range. And the stock hasn't looked back after that. It's just been selling off and off. um, so here what the stock has done is it's gone and filled this gap here, coming from the March of 2020. So that's when the markets were tanking because of the pandemic, COVID fears. And it has found some support. It is now bouncing. It could perhaps, bounce as high as $40.40 roughly, which is 38.2% Fibonacci retracement. And here it is likely to find stronger resistance. And if the price begins to fail here to move higher, then the possibility that we are looking at is this bigger ABCD one-to-one projection, which could actually see the stock move lower to around 78.6% Fibonacci retracement, which comes around the $29.13. And the ABCD actually, moves a little bit lower, and we have this gap formation here. So this could actually see it go down to around $26 per share level. But we have to take things one by one. We have to watch for these potential support levels, resistance level. So of course I will be doing these videos and keeping you guys informed. So guys, this is what we are looking at in the key banking stocks in the United States. So it appears based on the price action that we are seeing, we have seen a bounce come in the financial stocks, the stocks of the banks, and also the broader ETFs. But it appears that it's not strong enough. We have certain key resistance level that these stocks need to overtake onto the upside. So it means that there is perhaps still stress in the financial system, and what the Federal Reserve has done, they have injected a fair amount of liquidity, but perhaps there might be other things in the financial system that we're not aware of. Maybe they might come out soon. Um, we hope for the best, that things remain calm in the markets. So what we'll be doing is we'll be reviewing these stocks, the banking stocks in particular, periodically, and we'll see how these are performing, because these will have an impact on the overall broader market as well. And perhaps the price action, the technicals might be able to give us some cues to what we could expect, perhaps from an economy perspective. So guys, this is what we are looking at in the key financial stocks and the broader ETFs. If you like our analysis, how we look at the markets technically using Fibonacci retracement and pattern recognition, then please do subscribe to this channel. And if you found the video of educational value, then please do hit the like button. That way I know that the videos are actually liked by people who find it of educational value, and it just encourages me to keep on producing these videos. Of course it takes effort to make these videos for you guys, and I will keep on doing that, bringing out more educational material out. So thank you guys very much. Good luck and good trading.